Okay, so as a reminder, we've got three different classifications of assets that we're talking about in this chapter. I don't really like how they have these listed, because what it's doing is, we've got business assets and non-business assets, essentially, right? And they've listed the capital assets right in the middle of the two. So I think it's a little bit easier to separate those out. So we have capital assets, which are otherwise known as 1221 assets, section 1221 assets. These are personal use assets, so things that are owned personally, not owned by a business, as opposed to, again, not personal property, but personal use property. So you're using it personally somehow. And then we also have investment property, okay? Capital assets, we're going to use forms 8949 and Schedule D for capital assets. And then we've got, like this, ink. And then we have over here, business assets. These business assets fall under two different categories: ordinary income and, now they just call it trade or business, but it's specific, how it's described is through how it's taxed. But these are, so this is 1231 trade or business. Same thing, trades, business. Ordinary assets are inventory, accounts receivable, notes receivable, and short-term business assets. (1231) trade or business assets are long-term, LT, business assets Now, they listed land separately, so these could be depreciable or non-depreciable, is what we'll say here. Okay, so either one. And, as they mentioned here, it's not one of these others. So, again, these classifications of assets, what we're talking about here are the treatment of the assets, not the type of asset. So, for example, what I mean by that is you could have land. Land could be a capital asset, it could be an ordinary asset, it could be a 1231 trade or business asset. The nature of the asset doesn't determine what category it falls under. How that asset is used and how long you've owned it will determine that. Okay, so land's a great example. If I have land and I hold it for investment purposes, I bought it because I think it's going to go up in value. I think maybe this area is going to be developed and I can make some money off of it, but I'm not going to use it in my business, and I'm not going to use it personally. I'm not going to build anything on it. I'm just holding it because I think it's going to go up in value. That makes it a capital asset. That same land, if I buy it and I'm going to build a factory on that land, now it's no longer an investment. I'm going to use it in my business, right? Now it becomes a business asset. If I hold that land for more than a year, it's a 1231 asset. If I hold it for less than a year, it's an ordinary asset. And the difference is in how it's taxed and how much tax I'm going to pay on any gain that I have from that land. Okay, I like this chart, but I think it's easier to keep those business assets together. We're further going to talk about two different types as well of 1231 assets. If you've read the book, you'll see there's some more code sections, and I'm not going to get too much ahead of us here. 1245 assets and 1250 assets. These are personal property, depreciable, and this is real property. Again, depreciable. I'm not going to talk in detail about those until a little bit later, but just to kind of give you, when we start talking about these 1245 and 1250 assets, they are subcategories of 1231 assets. So it's not like a completely separate category of asset. All right. So a 1250 asset is also a 1231 asset. A 1245 asset is also a 1231 asset. Okay. All right, so when we left off, we had already talked about ordinary assets and what happens when we sell those ordinary assets, how they're treated for tax purposes. So ordinary assets, if they're sold in the course of business, so I've got inventory and I have a retail store and I sell my inventory just in the general course of business. This is what I do, I sell inventory. Then it's going to be reported on the Schedule C. Accounts receivable as well. If I just collect on accounts receivable, that income then that I collect is going to be reported on the Schedule C. Subject to self-employment tax, all of that. Now, if I sell these items, the inventory or the accounts receivable or the notes receivable, if I actually sell them outside of the normal course of business, so I've got a bunch of inventory that I can't sell in my retail store, so I'm just going to gather it all up and I'm going to sell it to I'm going to sell it to another business for half price. That's not my normal course of business, right? I'm just trying to get rid of it to make room for other inventory that I'm going to purchase. That's outside of the normal course of business. That then means that inventory is not going to be reported on my Schedule C. It's going to be reported on form 4797. Now the great thing about that is it's not going to be subject to self-employment tax because it's not on my Schedule C. The only income that's subject to self-employment tax is income that shows up on my Schedule C. Okay, so I'm not going to have to worry about self-employment tax on that. Accounts receivable, same thing. If I sell my accounts receivable, I've got $10,000 of accounts receivable people owe me. I either don't want to be bothered selling them or trying to collect them myself, or I'm questioning whether or not they'll actually be collected. I can sell them to somebody else who will do all of that legwork for me. I'm not going to get 100% of the value, right? But I'm going to get something. So I sell those accounts receivable or a note receivable to somebody else that's outside of the normal course of business. I'm not collecting it from customers. I'm collecting the funds from another entity. That is going to go on form 4797. Still going to be taxed at ordinary income tax rates. Those income tax rates that we've talked about, those brackets that are at the back of your book when we did it in chapters 1 and 2. It's going to be taxed in that manner, but it is going to go on to a different form. Short-term business assets are assets that I have owned for 1 year or less that I've used in my business. That's also going to be reported on Form 4797. Any gain or loss on those. So the great thing about this ordinary income, treating it like this, first off, these items now, I'm not going to be subject to self-employment tax, which that's cool, right? I lost my train of thought. Dang it. I hate when that happens. There was another thing I was going to say about them. Oh, losses. So losses will offset other income on my tax return, and there's no limit to the amount of those losses. So if I have a loss on this business asset, then, and it's like a $5,000 loss, now all of a sudden all my other income on my tax return is reduced by $5,000, I'm going to pay less income tax. Could be 5,000, could be 50,000. There's no limit on it, right? As opposed to over here, which we'll get to, there are limits on losses that you can take. Okay, so this one we're going to use Form 4797. Over here, the 1231 trade or business assets. Now remember, these are long term, so I held them for more than 1 year. So 1 year plus more than 1 year. These are equal to or less than 1 year. Okay. So if it's exactly 1 year, it's short term. Hold it one more day. If it's a gain, hold it one more day. So these assets over here, the 1231 trade or business assets, will go on either, well, they will go on Form 4797, and they maybe will go on Schedule D. So this Schedule D could be used as well for these 1231 trade or business assets. Okay? Forms. So kind of get the distinction. There is a, by the way, there is a chart in the back of this chapter that may be quite helpful for you. Pull it up right now, just real briefly. There, it's here. There it is. So this shows all of the asset types in this list. So kind of like the chart that I just put up here. And what they, so their descriptions. What they are, what they aren't, how gains are treated and losses are treated, where you report it, and examples of what they might be. They don't mention here Schedule D, but there are times it says reported on Schedule D. All right. When we left off, any questions, I guess, right now? So we talked about those ordinary assets. Those are going to be reported on Form 4797. We started to talk a little bit about capital assets, right? And what happens when we sell capital assets. So let's talk about this. So there are several, and I know I started to talk about this, but I'm going to kind of emphasize it a little bit more today.